So, four simple rules to allow you to invest in cryptocurrency and be successful. Hi everyone, welcome to the channel. If you're new, subscribe, bell button, leave a like. It majorly helps. Let's get this video top of the algo because some people are a bit, irritating at the moment because of how they are teaching things, and I think leading people to a false sense of kind of hope, that kind of element of I'm going to get really rich very, very quickly. Why hasn't it happened yet? I was told there was Lambos, that old meme. But I want to talk about this in a very, very simple way. Now, yes, it is simple. If you have been in the space for a while, you may actually know this very, very clearly. But there's always different ways to talk about it and go over it. So I'm going to try and reinvent the wheel a little bit. Now, I know people are new in the space as well. I know that people have got in this space at potentially the wrong time. I know that's a bit of a weird one to say, but I know people will always go hindsight. Well, it could keep going up. And yes, it could, but it could also go down. The thing is, right, everyone puts it on a pedestal that we're just going to keep going up. But you don't know that, right? That's the bottom line. You also don't know what the other person is on the other side of the fence, essentially. What their mentality like, what is their risk appetite like. So when we start, going a little bit deeper, a 10% dip to someone might be an opportunity. A 10% dip could be an absolute crisis for someone because they've risked too much money that they cannot afford to lose, which is obviously an important thing. Now, obviously, you go on Twitter, you go on YouTube, you go on Reddit, you go on all these places, you'll get, so many different sides of the coin, you're then confused. This is where it all starts. There's four rules that I like to pick out, and we'll go on to it on the chart and I'll show you them. And it's an acronym. It's an acronym that I put together. It's very, very simple, and it's a bit too simple in reality terms because it takes time as well. Investment is about three things, in my opinion. You got time, it takes time. You got timing, there's a lot of time involved in it, but you've also got to pick your timing right. And the most important thing is luck. You've got to be lucky as well. You've got to ride that luck. Some coins will do better than others. Some investments will do better than others. Some will do worse than others. Sometimes it is a luck of the draw. The right opportunity at the right time with the right amount of experience to find that, opportunity, then you can kind of go for it. But let's go on to the chart. Let's talk about some things. Let's make it very, very clear. I will show you this acronym that could potentially, help you. And I think it will because it is super, super simple. But I don't think everyone goes for these sort of things. I don't think people understand the basics, which is why I think people are hurting right now. So we'll go over some stuff. So first of all, on the screen, Learning Crypto, that is obviously my company. If you want to learn, free and paid courses are on there. We've been pretty busy the last few weeks because a lot of people have been wrecked essentially with the market. Some people like to, I feel it's like a kind of addiction service where people get wrecked. They'll hit rock bottom and then they'll want to change something. Usually people start to learn on cryptocurrency that way. It's a bit of a random one. But let's talk about the basics, right? Now, as I've said before, people are coming into the space. I talked about this yesterday in terms of a bit of FOMO coming in with Ethereum. Everyone's going, it's going to go ballistic, it's going to boom. But if that only does a 2x, I'll be pretty disappointed. If you're a new time investor thinking that you've been watching YouTubers and go, oh, let's do this, that, and the other, and you probably will be disappointed that you could have bought something else for a little bit more risk reward. But at the same time, it's all about being profitable. At the end of the day, it's about picking your battles. It's about timing. I think if you are a brand new investor right now, I think the timing is off to just go aping into Ethereum right now because it's, in terms of the BTC pair, it's really high. If BTC goes for a run, it's just going to drag up the USD value of it anyway. So realistically, what you're gaining, this could cataclysmically come down. There's a huge divergence of the weekly time frame appearing. This will come down at some point. So you just, don't lose your Satoshis over something that someone has said. That's probably too far-fetched, realistically, right? So let's talk about this little acronym, which is very simple to understand. There's four little words, right? It's easy. It's called tier, and not the tier out your eye, as in tier, as in a tier of a cake or a different level sort of thing. And it also kind of acts as in experience as well, because the further you do this and the more you do of this, the more easier and obvious it is. So the first one is T, and it is trend, right? The second one is obviously, in my opinion, pretty key. indicators, right? Indicators are absolutely massive. Are they confirming the bias of that trend? Is it going up? Is it going down? What is it doing? Now, you can use multiple indicators here. You can use, obviously, moving averages, RSI, MACD, stochastics. You can use Bollinger Bands. You can use whatever you want, right? As long as it's bullish, as long as it's showing it is bullish, that is fine. The next one is the one that people always forget and wonder how to do this. This is where my Twitter, for example, feel free to follow me, but please don't ask me these questions. Don't ask for an entry. Don't ask for an exit. You're a diamond hand. Let's be honest. Diamond hand, as you know, the terminology on Urban Dictionary is someone who does not know what is happening in the market. They're just going to hold forever. Basically, that is a diamond hand, in my opinion. Entries, exits. Simple, right? Because if it's bullish and you got the good indicators to say it's bullish, you got to pick your entries, right? And you've also got to get your exits. And the last one, it's the obvious, and it's the one that everyone forgets, and the one question and the one answer I always give: realized profits, boys and girls, right? Realized profits, and that's it, right? So when we start breaking this down and looking at it, you can write that down very, very easily. It's super easy, and I don't know why people don't do it, right? The one that kills people is the bad timing. Buying a bear trend when you've looked at a video and you think, I like that, I want to buy it. But you don't wait for the perfect entry. And you're seeing all the indicators, probably don't understand the indicators, it's just going down and down and down. You're wondering why it keeps going down. And then you get a really bad entry and then you're kind of stuck in it. Then you can't take that realized profit, which is kind of a problem. So when we look at that and we combine it all together, the worst one for me is always timing, the trend. People buy at the wrong times, but I think secondary to that, it's not taking money off the table. So you got two sides of the coin. I think taking money off the table and watching it drip away and drop off like a cliff, I think that's the worst. I hate seeing, say, if you've got 6 figures on the table and you just watch it just obliterate, that's the worst feeling in the world. But I also think timing, and this is why I talk about dominance chart. This is why I talk about trying to keep your Satoshi levels as flush as possible. Don't buy in a downtrend, but also don't buy in a trend that is absolutely going parabolic and you got indicators to say that it's going to probably turn around. For example, what's on the screen right now. Why would you want to invest in Ethereum at nearly all-time high levels in the BTC pair when there's a bearish divergence appearing on the weekly time frame? You just wouldn't. Well, I wouldn't, but you might, because you don't understand. You might have watched a BitBoy video saying, oh, Ethereum's going to go to 75k. And you're looking at the price and you go, well, it's $4,296 now and it could go to 75k. I want to buy that, without realizing you've got the poor timing element of it. But that's the element to it. Now, let's talk about some other things as well, just kind of go off a bit of freestyle. And I want to talk about this because I know I talk about it a lot. Realized profits is absolutely pivotal. Unbelievably pivotal, right? Because this is how you can make that success even better. Now, there's different ways you can make a successful portfolio, right? The first one, you take your realized profits, you wait for the market to kind of crumble a little bit, and you rebuy low, so you got more units, more things, more individual assets of that one coin. So instead of having, say, 5 Polkadot, you can maybe have 10 next time for the same amount of money that you took profit for. Winner, right? Another thing you can do is go over to BlockFi as an example here. Passive income. If it is a potential long drawn out bear market, again, we don't know what's happening with the lengthening cycle theory and stuff. We may get a longer bull market, might get a shorter bear market. But what I will say is, if prices fall down 60-70% and you're waiting for 12 months thinking, what can I do? Well, why don't I just put it into this, for example, some profits and earn a bit of passive income? Then you can utilize that in 3 different ways. As I've mentioned before, you can either spend it if you so wish to, you can compound it to make even more, or the most popular in a bear market is reinvest that profit or capital that you've earned through the DeFi mechanisms and reinvest. Right? Cool. If you do join via my link, you can get some free BTC. But that's the thing, right? We're talking about this, we're talking about recycling of money. Going from unrealized to realized profits and then rinse repeat. You are then finding a new bull trend to jump in on. The indicators are correct. Your entries are good. you've mapped out your exit, which I do anyways on my charts. If you join me on Patreon, you'll know where my exit points are on some coins. They may never get there, but they're there just in case, because you have seen some coins that go absolutely mental, and I will show you some in a second. And then you've obviously got realized profits. It's simple, right? I know, it's simple. Let's go over to some of my coins, right? I'll talk about KSM very, very briefly, right? Now, I've got the BTC pair there. I've got this one here, right? So entry levels for me, not perfect, but I do rate it. For me, I rate it. I like it a lot. Now, what I've done here is I've gone to the monthly timeframes, and all I've done is I put Fibonacci levels up here, right? Mental. I know. Some people might be like, well, they might never even get there. They might blast right the way through them, which is fair enough. But they're there just in case. If we go to all-time high, I will take a little bit out. If we go to $760, I'll take a little bit more out. $925, take a bit more out. You can see the picture, right? Now, when we start looking at other coins and other assets that have done incredibly well over the last coming weeks, you've just got to think to yourself, what would you do? Right, this is like some old chart in here. I'll go to the weekly so you can see it a bit better. There you go. Now, some people won't do this, and I know they don't do this because they just hold on to it. Some people will find out about Avalanche after it's done a monster run. I've known about it for a while. I should have invested in it. I didn't. I knew about it in the ICO. Yeah, yeah, stupid idea. But hey ho. When we start looking at the Fibonacci, for example, here, so let's go from this pinpoint here to this top, right? Now, this is where it gets interesting to note that, well, we've absolutely went mental, went way above this level. This level here could have been a profit level. You know, and I know people will go, well, it went much higher. Well, yes, it did, but it's also much lower than that now. You've got to plan your exits at some point, right? You've got to do it. And even though that is like a very, very obvious bit of a trend, cool, go for it. Now, what other confluences have we got from that point? We can just go from the absolute bottom here to this, again, the same level. Guess what happens next, boys and girls? We pulled all the way back into this level, and guess what? It went even higher. So you could have maybe taken profit here. A little bit different, a bit higher, but again, you're out. Yes, you may feel a little bit like, oh, but it's actually going up. It's a bit higher. It went up to like $146 actually. Pretty good, to be fair. But again, look at where it is right now. You've got to take what you can, when it's there. Some people may be thinking, you know, at that point in time, right, when you're looking at that retracement from $80 and you're thinking, wow, this could go to 120 odd. Okay, cool, go for it. But some people just don't back themselves and they don't go for it, which is fair enough. Now, what can happen next? Now, this is the interesting point. We can go from this point here to this top, which is where we have corrected. We are currently on roughly the 618 levels here. We've actually stopped around where this previous all-time high was, so there is a level of demand there. Guess what could happen next? Well, I don't want to put words in your mouth, but if this structure does hold and you were looking for new profit-taking targets, the first one is the previous all-time high. That's kind of a given, right? You know, I don't have to kind of, you know, teach you how to suck eggs there, but if you were buying a lot lower and you're thinking, well, I could take money out of the previous all-time high, go for it. You know, there's nothing wrong with that. The next one, $173 and then $206. You've got to plan these exits well in advance. Unfortunately, the only thing you can utilize is basically the Fibonacci on price discovery with extension levels. But realistically, if you've got some sort of level, or if you want to, and some people do this as well, round numbers. If you just want to go, if it goes to $100, I'll take a little bit off the table. If it goes to 150, I'll take a bit off the table. If it goes, you get the picture, right? You know, you can't really, you know, reinvent the wheel too much in terms of profit taking, because it's the most subjective thing in the world, and it is. And it frustrates me a little bit when people like ask me, because you should be in control of your own destiny. And the point that I always say, certainly with this, is if you buy low, well done. If you sell high, well done. That's brilliant. But also within that, you got to think to yourself, you're in control of your own destiny. You should be picking your own exits, your own entries, because you are in charge of your own capital. Then you got risk management. Too much risk on one coin can slaughter you. Don't go too deep. I personally go about 2% on most assets, certainly if they're lower cap coins. If they're higher cap, for obvious reasons, a core hold, obviously a lot higher, right? That's kind of obvious because they're a lot more established, a lot more likely to survive, not going to be as volatile. But if you're buying like a coin that's only, what, 10, 12 million market cap, thinking, I'm going to hit a home run, I'm going to go 50% in, and that nosedives and kills you, well, that's your own fault, really. So that's it. I don't want to go too far. And I know people are hurting right now because the market hasn't delivered you the goods yet, but it's all about time. If you've been in the market for a long time, you'll be all right. If you joined last week, sorry guys, you're probably a bit of a loss right now. It's just where you kind of jump in. The trend is your friend, right? And I've seen it before. And let's look at Ethereum. Just one closing point here, right? If we go back in time and you were like, I'm going to buy Ethereum in, I don't know, January 2018, and you waited and waited and waited and you didn't even bother dollar cost averaging at the lowest of the lows, well, that's another thing you need to do as well. All starts with T, the trend. When it turns, then it starts with an E, entry, get the best entry. If you know the entry, if you know the indicators, if you know what's happening in terms of the trend, then you've got that good entry from those. It's just about realizing profits. If you were holding Ethereum since like 2019, you'd probably be all right now. Let's be honest here.